The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome back to the Option Block. We are, of course, your bi-weekly choice for all things options related. A little bit of options wit, a dash, a sprinkle of options wisdom, throw in some analysis, stir it all into the pot, and maybe add a little bit of a sprinkle on top, the cherry, if you will, of some hilarity or perhaps attempts at hilarity. We try our best. We're not really comedians here, but we do our best to give you the most bang for your buck here on the old Option Block. My name is Mark Longo from theoptionsinsider.com, as well as from a little thing we like to call the old Options Insider Radio Network, upon which many of you are listening to this fine program right now. If you're not doing so, then by all means, a lot of great places for you guys to find it, including iTunes, Stitcher, Aha Mobile, wherever you like to find your podcast of choice. Our network should be featured there. Or if you're streaming it on our website right now and like to add it to your iPod or iPhone or smartphone of choice, a lot of great ways to do that as well. And of course, the smartphone app, we've been talking about the mobile app, should be coming in the next couple of weeks, so stay tuned for that. Make it even easier for you guys to listen to this fine, fine program. And speaking of this fine program, I have some great guests joining me, some great co-hosts on the old all-star panel today, starting off with the man of many hats, a.k.a. the Viceroy. He is known far and wide as Alex Jacobson, the major domo in the education department over there at Options Express. Alex, welcome back to the show, sir.
Hey, Mark. Good to be here today. And the news today was dominated by the little fruit company, Apple, up over 20 points today.
Yeah, apparently they love it again.
Yeah.
Apparently it's back on the upswing. They love it, they hate it, they love it, they hate it. It's very fickle out there in Fruitland, but c'est la vie. And so, yeah, Alex, hope you had a good weekend. Glad you could make it back on the fine program and you survived those monsoon-like storms we had last week in Chicago.
Yeah, survived everything. Good to be here today, Mark.
All right, and also joining us a little bit later on the program, we'll have good old Mark Sebastian. And making a special guest appearance in the old strategy block will be none other than good old Uncle Mike Tusaw. Couldn't make it for the whole show, but of course he had to jump in for the strategy block, and you'll get to hear that a little bit later in the show. But right now we're going to dive right on into the trading block.
The Trading Block.
All right, and welcome to the Trading Block. This is, of course, the portion of the old program where we break down what was moving, what was lighting up the old tape on the street. And it was a bit of an aggressive day. It started off relatively unched, a little bit of some downward pressure, and as the day went on, it seemed to build and build throughout the marketplace. When at the close here, the S&P closed down about half a percentage point to 1701, still trading around record high levels, but taking back a little bit of those profits. You also saw the Dow down about a third of a percentage point to about 15,401, and the good old NASDAQ leading the charge of the laggards today, down only about a quarter of a point to 37.65. Much of that, as we alluded to earlier from Alex, due to just the upward pressure and the love from good old Apple, really just pulling the whole NASDAQ realm north. Speaking of Apple love, we are joined right now by good old Mark Sebastian from OptionPit.com. You'd have to look far and wide to find a bigger Apple lover than him. Mr. Sebastian, welcome back to the show, sir.
Oh, yeah. Well, you know I love Apple. There's nothing better than that. They had a good sales number, but I don't think it's game-changing. I don't think anybody's been overly impressed by this phone. The sales, I'll bet you we're going to look at those, and the low-margin product has sold a lot more, and the high-margin product maybe not as much. You don't see those same lines that you used to see. What's done is done.
It's kind of funny. It seems like this is par for the course for them. They announce the new phone, whatever it is, the street smacks them down because they're underwhelmed, and then it sells relatively strong, or relatively well, and then the numbers go back up. So this happens every cycle, every year, like clockwork.
Here's the story. It's a $500 stock now. It is not a $1,000 stock like everybody thought. It's valued relatively fairly now, and that's that. All right, it's a little bit of a get over it.
Yeah, we don't want to spend too much time here on Apple, because also Uncle Mike, the biggest proponent is not on the show today. But Alex, really quick, I'm sure you saw a lot of interest today, lighting up the old tape at OX from an Apple perspective.
Yeah, Apple was clearly the most active thing on the desk, but an interesting day for the desk because Tesla has dropped off. So we weren't seeing a lot of love for Tesla today. The other thing the desk was active with, interesting enough, Priceline obviously is keeping the desk hopping, but Google came back in as one of the names lighting up the phone today, and VIX options have been lighting up the desk here in the last few days. And I just got our August numbers, and our percentage of VIX we did has jumped dramatically in August and through most of September.
Well, Alex, I don't know if you know, there was this. I know this is normally for the odd block, but on Friday there was a couple of customers that came in buying up call stupids in October and November in VIX in size. I want to say they bought the 1822 and the 1920 the 1822 OCT call stupid somewhere north of 70,000 times, and the Nove 1926 call spread in size against selling a 1412 put spread. So we saw some real interesting upticks in volatility. And then when you add kind of what we just got through with the Fed, it's kind of rolling from event to event. There's a real, there's some good reasons why VIX activity has picked up.
Good old call stupids. You don't see them very often at all, let alone in a quote-unquote professional product like VIX for any sort of size. So that's interesting in and of itself. But I'm glad you brought up VIX. I was joking before, of course. You're not really a big Apple devotee, but you are indeed one who likes to look at VIX. And we saw some interesting movement out there, particularly in the VIX cash realm. It seemed like a lot of us kind of questioning whether they were taking off or being a little bit aggressive going into the weekend, given everything else that's going on in the macro realm. It seemed like VIX was coming off a little bit aggressively. Do you think today they were just putting that back in and then some, because we saw VIX cash today up well over a point, up nearly a point and a quarter today?
They took out the weekend, and so you get your weekend adjustment, and then VIX was up a little bit. 1430 is going to be about normal for a low VIX period of time. And, I was just doing some work for Kramer, and historically ahead of this Washington brinksmanship, even though it's much ado about nothing, the VIX gets bid at least to kind of that 17 level, that 16, 17 level, and we'll probably see that again. I mean, why wouldn't, everybody expects the deal to get done, but, you're still going to see a bid on the volatility products, and I don't think this particular crisis or quote-unquote crisis is going to be any different from any of the other ones.
It's funny, 2 years ago or so, we saw everyone fading the last debt ceiling debacle, and when it seemed like everyone was just loading up on downside, and any product, any vol product in particular, they could get ahead of that, thinking that as soon as the deal was done, vol would come off aggressively. Of course, it was indeed the opposite of the case, and they had to roll for many months in order to make those trades even break even. Last year, we saw some similar scenarios unfolding in the marketplace. People far less aggressive in fading at that time because they got burnt the year before. It'll be curious to see what we see this year going into the debt debacle if everyone aggressively fades it again.
The one key that we know is you may see a little bit of a vol fade, but coming out of these events, you don't have to try and buy the market and or short VIX ahead of it. There's money to be made waiting for something to happen and then getting into it. And that's kind of what I've seen statistically, and there's no reason that this would be any different, to be honest.
Well, yeah, if it plays out like a couple of years ago, there were 2 months of wild rides after the sort of quote-unquote deal was supposed to be struck. So there certainly are ample opportunities if it plays out again for you to get in after the fact and still make money on direction or vol or both. So yes, you don't have to dive in ahead of all the kerfuffle. You can keep your powder dry and wait until the timing is right. Speaking of the time being right, we've talked a little bit on the show recently about every Canadian's favorite stock, aka used to be RIM, now BlackBerry. They were vacillating quite a bit. Remember back about quarter or two ago, they really got slashed. Post earnings dropped down into the 8.5-9 range, and then a few weeks ago they announced they were probably going to put themselves up for sale and sell off some of their patents. Stock rallied quite a bit. In the meantime, it was a pretty attractive premium seller, I know, for a lot of our listeners down in that 8-9 range because it was paying fairly attractive volatility levels, and it was a relatively limited mover, so that attracted a lot of premium sellers. It gapped up and maybe burned out some of those guys and also let people a little bit more, I think, less trigger-happy about BlackBerry. Now we're seeing them coming back down the other way again, closing today down actually a little bit up on the day today, but they've been down over the past week or so, down about $1.50, nearly $2 off news that they are finally going to perhaps sell themselves if they can work out all the deals behind the scenes and get all the compliance for, it looks like, about $4.7 billion, which works out to about $9 a share. It closed today $8.82, so people still perhaps not entirely certain this deal is going to go through, hence a little bit of discrepancy there in the stock, but perhaps a former high flyer, an attractive name for a lot of premium sellers on our audience here, being taken off the lists, as it were. If this deal goes through, they go public or they go private, and no more of the great BlackBerry premium right that a lot of people have been playing for quite a while, to relatively decent effect for the most part. If you were decent in mitigating your risk through some of those big moves, certainly it wasn't a Netflix or a Widowmaker like some of those other names we've talked about on the show. Mark, any of your clients really come in over the last few months looking to play BlackBerry aggressively?
I have a few Canadian guys that were kind of rooting for it, but staying out of the way because of their allegiance.
Yeah, they don't play it. They just buy it. They buy calls and they buy stock. That's all they do.
Yeah, I mean, they were all trying to stay out of the way to avoid BlackBerry being BlackBerried. So it definitely has its issues, and I just don't. I did not see a lot of people really interested in it once it got to be a single-digit stock.
Alex, was that definitely the case over at OX as well? It kind of faded from the radar a bit over the last couple of cycles once it really got slashed and headed south of 10. Not as many calls coming in on the old desk for BlackBerry.
Yeah, that's exactly right. Plus, we exited our Canadian business, so it's just not a name that's been showing up in any of the reports here.
I'm sure if you went back and looked at those reports from the old days, I'd say about 80% of that Canadian business was probably RIM now that, or BlackBerry, I should say, now, especially now that Nortel is really not a fixture any longer. BlackBerry took up all that slack.
Yeah, little by little, if you look at the telecoms and the equipment makers, there are very few people left. And the talk lately has been about more consolidation. One of the only plays there has been, Qualcomm. And every day you hear about what Intel's going to do in the space or what they might do. But not a lot of BlackBerry going on here.
And you touched on Tesla earlier. I think it probably was a little bit quieter on the desk today just because Tesla actually had the temerity to sell off today. One of the few days that Tesla has been down in recent memory, selling off about 2.25 or about 1.2% on the day to 181. I think that came as a surprise for a lot of your OX customers because Tesla doesn't really seem to drop. Has just been rallying, broke through 100 earlier this year, and it hasn't really looked back since. You probably can count the number of down days on one hand over the past few months. So maybe they were just in shock that Tesla actually could sell off, and so they decided to take a little bit of a break on the old desk. Speaking of taking a break, I think we're going to take a break here for this trading block and keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, welcome to the Odd Block, listeners. I hope you've got your fedoras on at home if you're playing the home game, and if you're driving along listening to us, hope you have your fedora nice and safe in the old glove box, and you have it ready to go as you're listening to us in the car. Going to kick things off with an old favorite of mine. I haven't looked at this one in quite a while. I certainly haven't talked about it on the Odd Block. It's Xilinx, ticker symbol XLNX, closing today at $46.60, down about 52 cents or about a little over 1% on the day. This is the name. Used to be a high flyer back in the day on the old CBOE. We used to talk a lot about this back in the go-go 90s, the dot-com era. This name and many others like it were quite active. Not exactly the darling it once was, but still fairly active, trading about 3,800 contracts a day, doing a whopping 13,000 today. And a lot of those coming in one relatively substantial trade. We saw a boatload, that's a technical term, of the OC 45 puts going up for a variety of prices. A lot of them is centered around 65 cents. A lot of these, of course, being buys. And yeah, a total of we saw a block go up earlier in the morning of about 4,800 with a total of about 6,500 going up on the day today. Given the fact that there are only 235 open on this strike, this certainly seems like a heck of a lot of opening paper. Don't really need to wait until tomorrow to make the determination on this one today. And if you look back at a little chart here of Xilinx, this one's kind of been drifting over the past few months in this 44 to 46 range. Of late, it's kind of rallied north of 46. Back at the start of September, it kind of broke the 46 handle and hasn't really looked back. So maybe this person coming in thinking this is an attractive level to hedge some underlying here. Mr. Sebastian, what's your take on all this put buying out in Xilinx?
Well, we're seeing that in Xilinx. We saw similar movement in NVIDIA. So it looks like there's a little bit of volatility expected in the sectors. My guess is that this is a long carrier, somebody going long that's looking to hedge out. Probably bullish, both volatility and the stock. And that's kind of the way I would be looking at this trade in particular.
All right, next up, staying on the technology front here on the old odd block, we have Sierra Wireless Inc., ticker symbol SWIR, closing today $14.25, down about 50 cents or 3.3% on the day. There's another one, not particularly active on a given day, doing about 200 contracts a day, lighting up the old tape with over 5,000 contracts today. So a lot of interesting paper going up here in Sierra Wireless. A lot of that being concentrated, and looks like one relatively substantial trade here on the OC 15s, going up at prices for about 35 cents and 40 cents, being sold relatively aggressively. Early on in the session, we saw about 600 of them going up, and then a total of nearly 2,700, over 2,700 going up in total on the day. It went up in three blocks, like I said, in the morning, and then they consecutively went up throughout the day for a total of 2,700, all in that probably 35 to 40 cents, maybe a little bit higher as the vol seemed to pick up here across the board as the stock sold off. And we saw, so this name's been moving from about 12 to mid-15s. Maybe this guy looks like, given the open interest of 2,900 contracts, this could be a very good candidate here for some closing paper, someone having some calls on the books and deciding to take them off while the getting is good. Senior Sebastian, a.k.a. Senior Greasy Meatball, what's your take here on these call trades, now upside call trades here in SWIR?
Well, SWIR is such a market mover that, I'm surprised this wasn't all over the place. I'm not so sure that the stock itself has made a big move higher. So these are not closing trades, in my opinion, unless they were a day trade. We saw this stock just, I guess it could have been, but the stock had a huge surge on Thursday and Friday, or on Friday and today. Just lots of volume. So it could just be that this is a stock that's going to start heating up here for a little bit. We'll see. I'm not sure. I'm not as sure those are closing.
Yeah, it could very well be. It could be an aggressive overrider looking like this is a good level. It could be some just aggressive opening paper overall. It seems so closely related to the open interest on that strike.
With that huge, I know. But with that huge breakout in the stock, it kind of seems like it could be just coincidence in size, but you're right. There's just lots and lots. This thing is just really taken off in terms of volume and in price. So that you just never know.
Listeners, this is one of those ones where you have to play the home game yourself tomorrow when you listen to the show and check the open interest numbers here in good old Sierra Wireless and the OC15 calls and see if indeed these are opening or closing. That'll be your homework for this episode for tomorrow. Moving on here in the old odd block, one more to go before we jump into the Express Block. We have good old, my favorite, Covidien PLC, ticker symbol COV, closing today at $62.61, down about 44 cents or near 3/4 of a percentage point on the day. This is the name that does about 1,200 contracts a day, so that's actually fairly impressive volume for them, doing a little bit less than that today. And what we saw here in Covidien actually wasn't today's activity, but yesterday's activity when we saw a bunch of OC65s going up across the board. We saw about 1,400 in total going up in prices around 20 cents. That was some aggressive selling volume. And what's interesting about that, not only was the volume in and of itself, and it was relatively sizable for Covidien, but we also saw some similar paper in the same industry earlier on. If you notice on our website, you would have found this one in Cardinal Health, ticker symbol CAH. We also saw some selling out of the money, low price, relatively out of the money calls. So it's interesting to watch these similar type trades in the same industry, in similar names, in price levels that are roughly from a premium level, at least, relatively similar, and it's worth noting of that in and of itself. If you missed the alerts, go on over to theoptionsinsider.com, type in CAH into our search bar. You'll see the alert we wrote up earlier this week, or actually late last week, about that name, and you could see and compare for yourself how the out-of-the-money call selling here, slightly out-of-the-money call selling here, in COV compares what we're talking about here in Cardinal Health as well. Mr. Sebastian, you watch either of these two at all?
You know, I'm not too ingrained in the healthcare business, other than fitness equipment, obviously. But aside from that, no. You know, when you're in such peak physical performance as Mark Sebastian, you tend to avoid some of the hospital names.
Now, if this was Chico's, you'd be all over it.
Oh, Chico's, I could tell you in a minute. Hospital work, not my strong point. Women's clothing, I am an absolute expert.
Women's clothing and that 50 and older crowd, you're there. You're my go-to guy for all of that.
That's correct. Correct.
All right. And on that somewhat troubling note, we're going to close out the old odd block today. Again, if you want more information on any of those alerts or the many others we didn't have a chance to review on the old show today, surf on over to theoptionsinsider.com. You can find them all there in the unusual activity section. Now we're going to keep on rolling right on into our Express Block. We have a little bit of a different feature for you guys today. We're going to have a guest.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, welcome to the Express Block. Now, this is usually the portion of the show where I toss it over to our friend, the Viceroy, and he gives us a sneak peek, a behind-the-scenes tour, if you will, behind the curtain of the land known as Options Express. But today we're going to go a little bit different route. I think it'll be very interesting for you listeners. I know Alex is always touching on some interesting new ideas, new initiatives, new products that the guys over there at OX are working on behind the scenes. And we thought, who better than to bring on one of the product managers over there to give you guys even more insider perspective into what they have cooking over there in the land of OX. So in addition to the Viceroy, today we're also going to have a special guest on the Express Block. He is Daril Wagner, the product manager over there at Options Express. Daril, welcome to the program.
Thank you, Mark.
Now, Daril, really quickly, why don't you go ahead and give our listeners a quick overview of what a product manager does over there at OX on a day-to-day basis?
Yeah, so product management, we are really the liaison between the customer and the firm, and we help represent what it is the customers are looking for and represent their voice in developing new and innovative and exciting products that help meet the goals and the needs of the customer to fit their trading strategy.
Now, one of the things I'm always talking with Alex here on the old Express Block segment are some of the interesting tools you have for idea generation over there. Now, Alex spearheaded one of those, which is the Idea Hub, and that's been a very popular tool. A lot of listeners love to flock to that tool over there at OX and use it for some basic idea generation, but there are a lot of other tools you can use over there at OX for the same purpose, including some new ones. And I want you to walk our listeners through some of these new ones right now. Like, for example, a lot of our listeners are into momentum, into seeing what other people are trading, and some of the other technicals that go along with that. And you guys have a tool that seems pretty well aimed at that. Why don't you give our listeners a breakdown here of this trading patterns tool?
Yeah, Trading Patterns is an exciting new tool designed by the pros at Options Express by Charles Schwab to make finding your next trading idea easy by providing insight into what the market is trading for stocks, ETFs, indices, and futures. Now, Trading Patterns allows customers to easily see what symbols fellow Options Express customers are trading and what options are being traded in the market for almost any symbol. Now, Trading Patterns, the way it was designed to help with that customer user experience, it's really broken up into two distinct tabs. Now, these tabs are divided into two main areas to help make finding your ideas easy. Now, Underlying Patterns is the first tab, and that allows customers to see what other customers are trading for any symbol. An example, if the customer were to enter symbol XYZ into Underlying Patterns, then the output will show that customers that traded symbol XYZ in the past 30 days also traded these 10 other symbols the most. So it's a great way to see what symbol was traded and then other symbols that customers traded also for that same symbol.
And now I think the underlying pattern will certainly, I think, interest a lot of our listeners, but I think what really will perk their ears up with curiosity are, of course, the option patterns. So why don't you go ahead and give our listeners an overview of the second part, the second tab in that trading patterns process, of course, the options patterns tab.
Yeah, so option patterns is the second tab. What I just described previously was the underlying patterns tab. Now, option patterns, this displays today's largest option trades by volume for any stock, futures, ETF, or index symbol. An example, if the customer enters symbol XYZ into option patterns, then the output will show the 10 most actively traded options in symbol XYZ for today. Also, this list will update periodically throughout the trading day. So the top XYZ options list that appears in the morning might very well be different in the afternoon depending on what's trading in the market.
Now, a lot of our listeners will probably want to kick the tires for themselves on this. So how do they go about using this? Do they they log into OX, obviously, and then they go to the quotes tab and they enter in a quote, and then these tabs, these secondary tabs, these trading pattern tabs will pop up? Or how do they get to this information on the OX platform?
Yeah, so once you log into Options Express, it's very easy to find trading patterns. It's in our top-level navigation. And trading patterns is a very powerful and easy-to-use tool that can help traders find actionable underlying and option ideas for any symbol, save time researching a symbol's largest option trades without having to spend any time looking for them in option chains. Also, it helps identify the largest option spreads traded in the market for any symbol. And you can quickly see market trends in the underlying or options market. And lastly, and probably most importantly, you are able to quickly find new trading ideas based on the symbols you know and trade.
All right, now, listeners, I'm doing it myself. I'm working along as we're doing the episode here. And if you want to access this for yourself, obviously log into your Options Express account and then go to the toolbox. He mentioned it's in the top level navigation, but it's not immediately discernible there. Mouse over the toolbox and you'll see trading patterns as one of the selections there. And that will come up with a trading patterns quote screen. You enter in your quote, then you'll see two tabs below that. On the left will be underlying patterns, and on the right will be option patterns. So if you want to kick the tires for yourself, that is the easiest way to go about it. Now, when did you launch these, Daril?
Trading Patterns was recently launched earlier this year, back in February, to our customers, and it's been received very well. Customers are praising it a lot, using it a lot, and we're very excited about the product overall.
Alex, anything to add here for our listeners on these trading patterns and options patterns tools? I'm sure you were pretty involved in the development and release of these products and giving some insight, particularly from an options perspective.
Yeah, one thing that I think is particularly cool is to take things like the odd block where you have unusual activity. And obviously, we all debate if it's a precursor to some event. But what's really a cool way to use trading patterns is to take some of the odd block names and see what else people were trading who were trading those names. One of the assumptions with the odd block is sometimes it's quote-unquote smart money. And, one of the things we debate a lot in the industry because, CNBC does this, Bloomberg does this, and of course we do it, is we do these unusual activity searches. And a lot of times when you identify unusual activity, 60,000 of these traded, normally it trades 500. What's interesting is to look at what else those customers traded and to start thinking about, hey, what's going on here? And is it a specific group that's gotten hot? Is it a sector that's gotten hot? We were talking earlier about, telecom and the equipment makers and how they're going away. But the good thing about trading patterns, if you say to yourself, well, the last one really left standing in that space, and not totally the last one, is a company like Qualcomm. Pretty interesting data looking at what people who were trading Qualcomm and BlackBerry, what else they were trading. And sometimes it's kind of an interesting weather report of, where the money flows, the same folks who traded some of these names, where they've been putting their money to work in the market.
That's actually a good point, Alex. And while you were doing that, I was just typing in some of our odd block names to see what came up here on the underlying patterns. I just typed in Sierra Wireless, and sure enough, Kulik and Sofa Industries Inc., ticker symbol KLIC, came up as the top related trade for that one. A name I am not familiar with, so I will certainly be digging into what correlations may be lurking underneath the surface there. So that, in and of itself, I think is a very interesting use case, Alex. And listeners, if you are OX customers, you should be taking advantage of this, listening to what we're talking about here on the old odd block. Type in the underlyings, type in the quotes, see what else is trading, see what options are trading out there, and you can do a little bit of your homework and research that way yourself. And of course, if you're not an OX customer and you've been listening to this show for the better part of 3 years, you've got a lot of great free information out of it by now. I think it's time to step up to the plate and open up an account. So the folks at OX know you're listening and keep guys like Daril employed, right, Daril?
Yeah, much appreciate that.
You sound so enthusiastic. You're dripping with enthusiasm there, Daril. So, Daril, before we let you go here, anything else you want to hit an overview on these trading patterns tools for some of our listeners?
Yeah, I just think Trading Patterns is a great tool. It's easy to use for any customer, whether it's beginner or advanced. It's a tool that you can quickly use symbols to get ideas on on trading ideas.
All right, and Daril, before you go, I would be remiss if I didn't attempt to get you in at least a little bit of trouble. So can you leave our listeners with anything, a tease, a hint on some of the cool things you guys are working on over there that they can expect coming down the pike from OX?
I wish I could, but I don't think my compliance department would be very happy with that. I will tell you that we are constantly innovating over at Options Express, so be sure to open up your accounts and check out some of our new functionality that we're working on.
Daril, I don't know if no one listens to this show. It's just me, you, and Alex here. So really, you can say whatever you want. It's just kind of a private show for the three of us here, and Mark.
Right. The three of us and Mark.
Three of us and Mark.
Daril.
All right, Daril, thanks for coming on. And we'll definitely have to bring you back on again down the road, and we have some more interesting tools, because I know our listeners love cool tools and fun things to use. And I actually wasn't that familiar with this until you came on and mentioned it. And I think just for our own selfish reasons for this show alone, I think these tools offer a pretty interesting use case to digging into some more of the unusual activity. I think our listeners will get a lot of mileage out of that. So thanks for coming on, Daril. I'll have to bring you back on again in a few months to see what other cool stuff you guys have cooking up over there at OX.
Thanks for having me. Really appreciate it.
All right, thanks for that, Daril. And now we're going to wrap up the old Express block and keep on rolling right on into the strategy block.
The strategy block.
All right, and welcome to the strategy block. Usually this is the portion of the show where Uncle Mike chimes in with some interesting stuff, and he is going to do that. Now, some of you might be saying, wait a minute, he hasn't been on the show so far, but he was able to record a nice little remote strategy block for us prior to the show, so you guys get to tune into that for your listening enjoyment right now.
Today I want to do a comparison of a butterfly versus a calendar spread. I don't want to sound biased towards either trade, because I'm really not, but I want to give the audience a feel for how the calendar spread can be a very viable strategy if you're traditionally a premium seller. I've talked about this on the show before, but today I want to look at it with some actual numbers while looking at my position delta, position theta, position vega, as well as position gamma. First trade that I'm going to enter into my computer, I'm going to start off with the Russell 2000. Now, as I look at this, the Russell is currently trading at 1068.42. Now, with that, it's about noon today Chicago time, noon Monday Chicago time, so that's when these quotes are from. I'm going to start by entering a traditional put butterfly. I have no bias towards either calls or puts in this. I just want to kind of give you an idea of how this can possibly work. What I'm entering is I am long a 1060 put, short two, not one, but two 1070 puts, and also long one 1080 put. Now, when doing this, the cost of the trade is approximately about $2.50. You could probably get a better deal than that if you're working the market, but we'll just leave it at $2.50 for now to make it easy. The position delta on this trade is negative 0.58, very close to delta neutral. Gamma, almost the same. Time decay, or theta, on this is 1.72. So that means that for every day that you hold this trade, $1.72 is going to be coming off of this trade. And that's assuming all other factors remain constant. What I want to point out is the fact that when you do a butterfly, oftentimes the time decay doesn't come into effect until later on in the cycle of the butterfly. So in this example, we're risking approximately $2.50. That's the most money we can make or lose, or $250, I should say. So that way, to give you an idea of it, that theta that I was talking about literally is $1.72. Now, let's say that the market expires right at 1070, then we're going to be at a profit of $7.50, because that's the distance between the strike prices on this butterfly. So with that in mind, the butterfly, as you can tell, can be a very rewarding trade. However, as most of us know who have ever traded more than one day in our lives, it's very difficult to predict exactly where the market's going to be. So, with that in mind, I also want to point out the position vega of this trade. It's negative 5.46. So on this trade, we're hoping that implied volatility goes down. We're hoping that the market doesn't move. Those are our two hopes with the butterfly. If they indeed do move, then what we need to be aware of is how we're going to adjust this butterfly in case such an event occurs. Now, what I want to compare this to is an October-November calendar spread. What I'm going to do now is I'm going to be long 1 November 1070 put and simultaneously short 1 October 1070 put. Both about at the money, and I want to point out to you some of the differences as well as some of the similarities of the trade. I'm doing a one lot, so the delta of this trade is 1.06. Very close enough to where I'm comfortable calling this a delta neutral trade. Gamma is about the same. There's two key differences for this trade. The first one is the price. I should say three key differences. The first one being the price. The price of this trade, meaning the maximum risk, is $11. I'm paying $29 for the 1070 put in November, but I'm getting $18 for the 1070 put in October. So the ultimate risk on this calendar spread is $11. That's where you have a little bit of the risk in play. Instead of $2.50, it's going to cost you a little bit more to do something like this if you want to be right at the money. However, you could make a case and say, well, perhaps the market's going to stay the same and we could maybe sell more premium come November in the weeklies. Who knows? But if the market were to go to zero, the bottom line is right now you'd be losing a lot more on the calendar than you would on the butterfly. The two things that are actually more beneficial, or one thing that's more beneficial, I should say, on this calendar spread is theta. This is the second of three key differences. The theta on this trade, instead of being 1.72 or $1.72 per day, it's actually $9.40 per day. So on this trade, even though it costs significantly more to use it, you're getting almost the same amount in difference from a ratio standpoint of time decay working in your favor as you did with the butterfly. That's a much better way with which to work it out from the theta standpoint. Now, the final difference of these two trades that I think you really need to be aware is that of vega. On the butterfly trade, we had negative 5 vega. For the calendar spread, we're at positive 50 vega, meaning we're long volatility. So with this being said, one thing that you'll notice with it is that if theoretically implied volatility increases at various levels, it can benefit you. Now, keep in mind that implied volatility can do whatever it wants on individual options, but my point is that you have a different volatility play when doing a calendar as opposed to doing a butterfly. So the overall points that I want to make to this are as follows. If you're a traditional credit spreader, meaning you sell a bull put spread or a bear call spread out of the money, or you do iron condors, and you feel that you're having to be a little bit too close to the money for your own comfort level, calendar spreads are something with which to consider. It's a total different way of managing risk. It's a total different way of looking at a trade, but it's something with which to consider. The other reason that I bring this up is that implied volatility, as of noon on Monday, when I am doing this segment, implied volatility is up, or the VIX, I should say, is over 9% on the day. So, with that in mind, if you believe that the VIX has more room to grow, or the VIX can go significantly higher, if you're doing credit spreads a little bit too close to the money, that could be hazardous to your health depending on what you are doing. So, with all of that, I'd like to thank everyone for listening, and let's have a successful trading day. So long, everybody.
All right, thank you for that, Uncle Mike, and now we're going to keep on rolling right on into our final segment, Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is, of course, the portion of the program where we peer into the murky ether of the future and tell you what we're watching, what is on our trading screens for the rest of the week. We touched earlier at the top of the show about some of the kerfuffle going on over the debt ceiling. I'd imagine that's on top of people's minds for the rest of this week and for the next few sessions at the very least. Senior Sebastian, we touched on it at the top of the show. 2 years ago, people aggressively fading it. They got burned pretty hard. Last year, not so much of a fade in the lead up, from a volatility perspective, in the lead up to some of the governmental debates last year. This year, you were saying you think people should keep their powder dry and maybe wait until after this stuff is settled out a little bit.
I mean, that's exactly right. I mean, I think we're going to see a VIX run up. I think people got burned enough in 11 that, although S&P, obviously the Justice Department going after S&P is going to stop them from any downgrades, so we don't have to worry about that. But I do think that you've got, is it a sale? Yeah. If you remember in 12-13, that whole kind of fiscal cliff tax thing, that 11th hour deal, there was plenty of time to dump volatility after the deal got done, and I just think that's the more prudent way to approach right now, especially with potential more Fed stuff. The one thing to watch for, and this is actually a lesson that a lot of people could learn, is that all those guys that shorted volatility, when the VIX didn't drop out, they had plenty of opportunity to buy back their premium before the market took a massive poop. And traders should be looking for that again. If you're looking to get short and the market doesn't drop and the VIX doesn't fall out, well, guess what? You're toast. It's not going to drop. That's what that means.
So take it off before the market takes a massive poop is Mr. Mark Sebastian's technical advice.
If you think the VIX should drop and it doesn't, something's wrong. All right? And Alex will definitely agree with. He can go so far as to say, if you make, and as a trader, if you're making an assumption, all right, and whether you're making or losing money, if it turns out your assumption is wrong, you should probably take off your trade and reevaluate, whether you want to be in that specific trade.
Alex, you concur with that, sir?
Sort of. Yeah. I think when you're in a trade, you need not to let your own public relations guide you. And first rule I was taught was when you're in a trade, have a threshold of pain and a threshold of panic. And at the threshold of pain, reevaluate, look around. At the threshold of panic, puke the trade. Mm-hmm. Get out. Don't start trying to analyze Congress or the Fed. You notice both Friday and today you had two Fed presidents who just seem to coincidentally be in the press talking about their view of taper. I'm a firm believer that Fed presidents do not happen to appear in the press randomly. But, yeah, a lot of news today. Interesting piece of news today, too, was the Buffett comment, which took Berkshire down a couple percent, and Berkshire's been on a tear. And paraphrase what Warren Buffett said. He said, it's nothing good to buy out there. And, add that to what's going on in Washington, add that to now the assumption is taper will come later, but not much later. And this market's got some vulnerability in it. This market's been very resilient. Every time they sell it off, it seems to run up. But to Mark's point, Washington's dysfunctional. And will they shut the government down? Man, they could. They could. You think, we all tried to crystal ball taper, and we were all wrong. So trying to crystal ball how dysfunctional Washington's going to be, they're going to shut the government down. I think in the last 10, 15 years, especially since the Clinton administration, there have been a couple shots at shutting it down. It has been shut down briefly for a couple of days, but there's no underestimating the amount of dysfunction in Washington, and especially September, October, when the Affordable Care Act is supposed to come into place. So we're keeping an eye on Washington.
Yeah, we got about a week if all these deadlines hold true for October 1st, so a little over a week for us to get a sense for how this stuff is going to play out, get a sense for how the paper's unfolding out there in VIX and SPX and other pits, too, to see how people are fading or perhaps not fading it or perhaps buying into the hype ahead of these announcements. And if you do indeed tend to disregard all the advice we've already said on this program about perhaps keeping your powder dry and waiting for the event to unfold to have a better sense of what's going on, then for love of God, don't do these naked trades a lot of our listeners like to do. Make sure you have some risk mitigated approach, some spreads. Don't do some crazy ratios where you're net naked short. Remember back to 2 years ago and what happened back then. There was some people who were fading this aggressively and they got burnt pretty badly, and you had to really roll and aggressively trade for several months to even get back to break even if you were fortunate enough to do that. So keep that in mind when you're going into this week. It's not a done deal that after October 1st this vol is going to come off like crazy. We could see the beginning of a flurry of vol, in which case that would not be a good bet for you if you were one of those guys who was fading aggressively. So keep that in mind. Go back, look at what happened in 2011, and inform yourself a little bit. I was going to touch on some earnings too. We are getting close to earnings season, but that seems to be so far distant compared to what we're talking about right now. And of course, the only one really coming out this week is BlackBerry, and that one's kind of a done deal on the 27th. Not really too much motion expected unless they decide to call off this deal sometime in the near future. So earnings, at least for the time being, on the table. All eyes on Washington. And as we said many times on the show here in the past, that gets well out of fundamental and even options-related territory and into a whole other ballgame of punditry that I think we'll avoid here on this program. So that is going to do it for this episode of the Option Block. But before we go, let me check in with each of my cohorts, my partners in crime here on the old All-Star panel, to see what they have cooking in their respective necks of the woods that may interest you. Starting off with you, Senior Meatball. What is cooking in the land of the pit?
Well, I got this VIX class I'm teaching with the CBOE on Saturday. And then the following week, I'll be teaching at the All-Stars of Options Conference at the McCormick Place. So I'm going to have both of those things should be really exciting.
Yeah, I noticed you're doing the Greeks at the All-Stars of Options. Interesting.
Yeah, I do the Greeks and covered calls.
Fun stuff. So stay tuned for both of those. You can find more information about those at the events section of optionpit.com. And Senior Alex, Senior Viceroy, what is cooking over there in the land of OX?
Just showcase a couple things we're doing. Wednesday, the 25th, this week, we're doing a webinar focusing on collars in IRAs and how they work and what can be done. We're also doing a promotion here inside the firm, actually, to showcase spreading in IRAs and what can be done. That's a campaign that actually starts this week. And then one, I sort of want to give people a little lead time for Jim Wyckoff, who writes the famous Wyckoff letter. On Tuesday, October 1st, we'll be doing his monthly kind of game plan of what he's looking for in the futures market for the month of October.
All right, good stuff. And, of course, Uncle Mike couldn't make it in person for the show, at least for the end of the show here. So let me, of course, remind you to visit RCM Asset Management and check out what they have cooking for the old Thursday night webinar over there at the TNT Thursday Night Trading Webinar Room. And if you are heading over to that All-Stars, whatever it's called, Options All-Stars event they're having over there in Chicago in a couple of weeks, stay tuned. Check out Mr. Sebastian's panel, and they stay tuned. I may be making a special guest appearance later on in the day there. Hasn't been worked out yet, but stay tuned. An interesting event, and if you're in Chicago, probably check it out. And, of course, while you're checking things out, be sure to surf on over to theoptionsinsider.com to find all of the archived episodes of this program. And while you're at it, you can also leave us a comment on the show notes for this episode or any of the other episodes that are up there, or shoot us an email, questions@theoptionsinsider.com, or find us on Twitter, twitter.com/options, or on Facebook, facebook.com/theoptionsinsider, and send us some feedback, some questions, some comments. We love to hear from you guys. And on behalf of Mark and Alex and Uncle Mike, and of course myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to this program and making it such a hit. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.